Every single reversal trade you've ever missed had one key thing in common. The higher time frame candles were screaming at you to enter the trade, you just hadn't seen them. I want to show you exactly how to get into high probability 2.83R trades, just like this EURNZD long, and how to front run this entry once you have a confirmed reversal signal. Let's get into it. So first and foremost, this is a swing trading example. Price is fractal, so this works just as well on the lower time frames. But I'm just going to use 12-hour price action for my execution. But here is the key piece. I'm going to overlay higher time frame candles because that is what's going to give me my reversal signal. So let's just do that. Here we have EURNZD 12-hour price action overlaid with 2-week price action. So these areas behind the chart are 2-week candles. So here's the low of the candle, high of the candle, open of the candle, low of the candle's body, close, sorry, of the candle's body. So this gives us our 2-week candle ranges. And this is the key thing you need to look out for. It's called AMD, accumulation, manipulation, and distribution. This is literally how markets move. What you see here is that price prints an inside bar. You can see that the 2-week candle, the high and the low, does not trade outside of the previous 2-week candle's range. Then something happens. Price aggressively shifts bearish on the 12-hour time frame and liquidates the previous candle range. And it also liquidates the previous candle range. So 2 candle ranges that price is breaking into. Why is it doing this? It's liquidating the external range liquidity at the low of these candle ranges. But crucially, something happens next. Price at this specific time closes, and you can see that it closes inside the previous 2-week candle range. So let me just show you that visually. Here's the low of the previous candle range. Price raids the low, sweeps the liquidity, closes right here. You can see the body of the candle is slightly above the previous candle. This confirms manipulation. This is the second phase of price. Accumulation, manipulation. Once we see manipulation that is aligned with higher time frames, this confirms a target in the market, which is the high of the previous candle that was liquidated, the accumulation candle. Accumulation, manipulation, confirmed. This is our reversal signal. Price is going to distribute aggressively to the opposing end of the range. Why? Because that is where the next pool of external range liquidity sits. So on the 12-hour time frame, we're waiting for something to tell us to trade. That is 12-hour price action. Even though we have confirmation of reversal, we still need to wait for structure to show its hand so that we can actually trade this. So this is our last sell to buy. What do we then get? We get the order block, which is the last sell to buy candle, which prints. We then also get a bullish fair value gap, an inefficiency in price between candle 1 and candle 3. You see we have a bullish candle, a big expansion candle, and then a ranging candle essentially here, which creates an inefficiency. We can buy from that inefficiency. This is internal range liquidity. The price will trade into and then away from. So this is a very easy swing trade. You then place your entry at the fair value gap, cover the liquidation because price has already done its job of liquidating this low, and you can then target the high. And that is a 2.7, 2.8R trade. That's super clean. I'm just going to leave this here and now show you the 4-hour chart. So this is 4-hour price action. It does the exact same thing. It's showing you accumulation, manipulation, distribution. Price is completely fractal. So this is our 12-hour price action playing out. It's extremely clean. What I want to show you is actually once you see that price has traded and closed inside the previous range, that's our signal. So when we see 4-hour price action doing this, we can front run the entry. And this multiplies our R multiple exponentially. So we have sell pressure, buy pressure, the confirmation of our first bullish 4-hour order block. We have sell to buy. So let's just say you front run the entry with a 4-hour entry. You're not waiting for price action on the 12-hour, you're getting involved at the 6-hour trade. Let's say you want a little bit more confirmation that price is going to react from this level. What do you then get? You get consolidation, sell to buy. New order block, the last sell to buy. And we also see the formation right here of a bullish 4-hour fair value gap. It's very small on the chart, but you can see it sits right there. Here's the thing, price didn't actually tag the fair value gap. It doesn't need to. This became a breakaway gap. But it gives you everything you need right here to take another entry. Because you're on the 4-hour, you're playing that 2-week AMD. Even if you just buy from here at the close of that 4-hour candle and you cover the entire 4-hour structure and you run this all the way to the high, 6.7R, and you have more confirmation that price is in fact shifting bullish. This is how to front run 12-hour swing positions. And it's not something that I'm yet to teach in detail on my channel. There's so much more coming. I just want to show you this in another pair. So this is gold. I'm going to look again at 12-hour price action. What do we see here? So without the 2-week candle, very little, we do see the price breaks above a high. So maybe we're looking for continuations. That is not what price is doing. Price has accumulated and it has manipulated the previous candle range. So this candle closes right here inside the previous 2-week candle range. So here is our high probability distribution target. Accumulation, manipulation, now distribution. Where is our liquidity? So if you want to take an entry at the formation of this candle, as the candle opens, you have an order block, the 12-hour order block. That is the last buy to sell. You also have a bearish, this time, 12-hour fair value gap. So the easiest entry, the most low stress, from the fair value gap covering the order block. However, you're only getting then a 1.56R trade. I'm not going to snip at that because to just place one limit order and then walk away and get a 1.56 return on your money is not a bad return. However, if you just wait and you see price breaks in, we're getting that bullish aggression, then we get a shift. Here is the new order block, buy to sell. We then get the formation of another bearish 12-hour fair value gap. Where are we getting in from? The fair value gap. We can cover the liquidations here. Gives us a more aggressive stop. 2.32R. Now, this again is just easily trading AMD. And there are so many opportunities in these wicks to get involved in front run 4-hour or even 2-hour entries to drastically increase your multiples. But that then comes down to what type of trader do you want to be. But the whole premise I'm teaching here is how to front run reversals, how to confirm reversals in the market. And it is just literally waiting for higher time frame manipulation, then aligning your execution time frame. So as you go up or down the time frames, this is what you're looking for. I have a 30 video 3-part series on exactly this. It runs through how to swing trade profitably using accumulation, manipulation, distribution. Go and check it out on my profile and please subscribe to the channel. See you on the next one.